This is the Asia Trade. I'm Paul Allen in Sydney, where markets have just opened. The top stories this hour. A positive lead-in for Asia, with Wall Street back near all-time highs, led again by big tech. The Stargate AI plan unveiled by President Trump, further boosting prospects for the sector. Not everyone's convinced, though. Trump backer Elon Musk getting into a public spat with OpenAI's Sam Altman over whether Stargate's backers really have the money. And we're just getting a fresh read on the AI frenzy in Asia, with SK Hynix posting record quarterly revenue and profit. Get to that in a moment, but first let's talk about South Korea fourth quarter GDP, which has just broken a little bit softer than expected. Growth of a tenth of 1% on quarter. The market was looking for 0.2 of 1%. On year, that's an expansion of 2%. Again, a little bit short of the 2.1% that was expected. However, this does reflect some of the remarks from the Bank of Japan, the Bank of Korea, I beg your pardon, a little bit earlier about how political concerns could be weighing on growth. Let's get, though, to SK Hynix, though. We've just had results from the memory chip manufacturer, and yeah, it's a beat, a narrow one. The market did have lofty expectations here. 8.08 trillion won. The expectation was for 8.03 trillion won. Sales coming in line, 19.77 trillion won as well. We have seen a huge run-up for this stock, up about 26%, even in the first 20 or so days of this year, up 60% on year. SK Hynix, of course, a major supplier to NVIDIA. All right, we have just opened for trade here in Australia as well. Let's take a look at how we are tracking in the early going. It is a staggered open, of course, so hard to get a read on things. We're a little bit softer, to the tune of a tenth of 1%. One stock we will be watching when it starts trading, although it does begin with an S, that is Santos, reaffirming 2025 production guidance. This is the major oil and gas producer. That's out with its fourth quarter production report, so we might see that stock move a little bit later as well. Nikkei futures, meanwhile, are flat. We've got the yen continuing to weaken a little bit, down at 156.42, the offshore yuan 728.19. Let's take a look at how US futures are tracking as well. We did see the S&P hitting a record today again on strong earnings. Netflix having a very strong performance. It was up about 9%. Did give up earlier larger gains. NVIDIA also up on AI optimism. Of course, yesterday's Stargate funding announcement from President Trump propelling a lot of those big tech names higher. Although we heard from Jamie Dimon as well at Davos. He says there are signs that US markets are getting overheated. Take a look at oil. That slipped a little bit. A lot of factors for the market to weigh there, including sanctions on Russia, tariff risks on China and the European Union, which might crimp demand. But let's get back to the big story in the Asia-Pacific this hour, and that is Korean chipmaker SK Hynix, as I mentioned, delivering record quarterly profit, extending its lead in memory used in data centers and artificial intelligence development. Our earnings specialist, Rana Sasaki, joins us now with more on this. So, Rana, what are the key takeaways, the headline numbers there from SK Hynix?
Yes, so SK Hynix reported a record revenue and operating profit this morning for its fourth quarter results. This slightly beating the analyst estimates, which is bolstered by the robust demand on AI-related products, and its quarterly results likely supported by the higher average selling price and a robust demand for the memory chips used for AI. And it's really underscoring how much the spending on the AI, artificial intelligence fronts, is boosting the company's the earnings. And then the SK Hynix recently discussed ways to even speed up the AI efforts with NVIDIA, which is the main supplier, including the speeding up its pace for development to keep up with the NVIDIA's demand. So the outlook is
we've seen a big
positive.
Yeah, but is that positive outlook going to translate to gains at the open? Because we've already seen a huge run-up for this stock, but the price-to-earnings ratio is starting to look a little bit rich. How much more room to run is there for SK Hynix?
Right. So for Yeah, the demand, the dominant market share is it's most advanced for the memory chips for the SK Hynix, and it's the dominant player leading any other chip makers at the moment. So we will see how the company will be going, but the outlook seems positive.
Well, in terms of the AI space, SK Hynix really putting its larger competitor Samsung in the shade, but we're going to hear from Samsung later today unveiling its new S25 phones. What are we expecting, and how significant is this?
Right. So Samsung overnight from Asia time launched the 3 new Galaxy S25 smartphones with AI-powered features, with a thinner and then a lighter hardware designs using chips by Qualcomm. And then their major selling price with this generation is aggressive AI expansion, which features are primarily handled by Google Gemini, with some on-device capabilities developed by Samsung itself. As they began the pre-order and device will start reaching to the customers on February 7th, this could boost the company's sales starting next quarter. And the Samsung early this month released the fourth quarter preliminary results, and its operating profit is recovering on the back of the AI-related demand for the memory chips as well. And the Korean company, the Korean won depreciation could be the tailwind for the component sales. And we are expecting its final result to be released later this month, specifically in the next Friday.
All right, earnings report, Rana Sasaki there on SK Hynix's results. Also the S25 unveiling we're expecting later from Samsung. Well, let's take a step back now to a broader macro markets perspective. I'm joined now by Laura Fitzsimmons, Head of Macro Sales for Australia at Deutsche Bank. Laura, thanks for joining us. It's a very news-heavy day. I failed to mention at the open there that we've seen yields on US Treasuries stabilising. Things seem to be settling down a little bit, but how long do you see this lasting? Because yields seem to be highly sensitive to the news flow coming out of the Trump administration right now.
Absolutely. And I think, rates investors have become used to very volatile markets in this asset class for the last few years. And I don't think necessarily the next month is going to be as volatile as what we've seen. But certainly there's a lot in play now, particularly when we look further out the curve, whether we're talking about fiscal deficits. Obviously, inflation is still important, but probably that sensitivity that the markets have had in the last few years around, a 0.1 miss on the CPI, for example, and everything being driven by the front end, we're moving out of that regime now. And so it is much more around, obviously what we're going to expect from the Trump administration, clearly on that front, but also what it means globally in terms of obviously deficits, surpluses, all of that is now in the conversation and obviously linked back to tariffs as well. Mm-hmm.
Well, in terms of tariffs, when you look around the world and which developed markets are the most at risk here, I know you've got some concerns about Canada being particularly vulnerable. Put your case to us here.
That's right. So particularly Deutsche Bank's FX strategists are really nervous and thinking that the story is underpriced for Canada. So clearly, we think from Feb 1 you're going to have the 25% tariffs. And I think essentially what the concerns are is, obviously if they look to then, sort of put something then in the retribution, it's going to create a real issue for Canada, where already I think, probably the BOC pricing is underpriced at this point as well. And so I think the feeling is that you could potentially be testing levels around north of 153, even up towards 160 on dollar CAD. So that's quite a clear theme that they're running with at the moment. And I think it's something that the markets can latch onto, particularly when they're looking for which trade is a clear-cut trade around the Trump administration. I think so far it's been a little bit uncertain, and I think that's one that we have fairly strong conviction on.
You mentioned debt and deficit a moment ago. I mean, we've got a big spending administration coming in here. At what point does the conversation really start to turn to this is a problem that has to be addressed? And there's a debt ceiling debate coming up as well. Do you see some risks associated with this?
That's right. We do. We do think, though, it's going to take a little bit longer than obviously just the next month or two. I think April is going to be key for a number of reasons, not just obviously we're going to hear more from April 1st on the tariff side of things, but certainly, then it's looking at the tax receipts that the US gets in as well. And so it's going to be a critical month, and obviously then the debt ceiling discussion as you move through the middle of the year as well. So I think for now, it's probably more sanguine on that front just in the very near term. But certainly we know that the market is very positioned into curve steepener trades on the back of that view, and the view that obviously there's going to be a lot of spending, and obviously this infrastructure announcement, in day one, it's pretty lofty. So I think the feeling is that those trades are probably right to stick with for now, and that's still a core view for us to remain short in the 10-year part of the US curve.
Well, we've got a Fed meeting this week, and it's kind of telling that I've buried this question so deep into the conversation. Normally, it'd be right up front, but is the importance of the Fed rates really starting to recede in favour of good old-fashioned fundamentals? Because we've got strong growth, a strong consumer, strong jobs. Is there a strong case for no more rate cuts?
That's right. And actually, Deutsche Bank's Matt Luzetti has been calling for no Fed rate cuts for this year since early December. And I think that was a really out of consensus call. And it's clearly been proven right in terms of what we've seen in pricing since then. And I think, obviously we've still got, a story to run in terms of the rest of the year. But right now it just feels like that is not the focus. And I think for the Fed, as they're coming in to look at, obviously the new regime next week, I don't think there's anything that really they're going to be that worried about in the very near term. And so it does seem like unchanged in the foreseeable future. It probably makes sense to stick with that as a base case.
Before we let you go, got to talk about Australia, because, of course, a lot of Australians have been waiting for a rate cut. Do you see it ever happening?
We do. We expect the first rate cut to come in February. And I think the market is then quite divided beyond that, though. I think we think we'll have the CPI set up to have that delivered for the RBA. But I think the Australian economy has obviously shown also that sense of resilience that we also saw in the US. A lot of that is down to government spending. And obviously we have an election approaching as well, where there'll be even more spending. But still, I think the view is then, like we have 4 cuts priced in our forecast for this year. The market's not quite there. It's got around 70 cuts priced in terms of basis points. But to be honest, the market is kind of wondering that beyond Feb, maybe the RBA may signal something a little bit more from a hawkish cut perspective. And the market shouldn't get too overexcited, I guess, that another cut is around the corner beyond Feb.
All right, Laura Fitzsimmons, Head of Macro Sales for Australia at Deutsche Bank. Thanks so much for joining us. Coming up on the Asia Trade, we're going to continue to unpack the SK Hynix earnings report. We're going to be joined by CLSA. Also, Principal Asset Management joins us to discuss their global markets outlook and why they're increasing exposure to US stocks. First, though, President Trump stepping up pressure on Vladimir Putin to negotiate an end to the war in Ukraine. We'll have details on that story next. This is Bloomberg. President Trump has threatened to impose taxes, tariffs and sanctions on Russian imports if Vladimir Putin doesn't end the war in Ukraine soon. For more, let's bring in Bloomberg's political news director, Jody Schneider. So, Jody, tell us more about President Trump's plans here. Is he issuing threats to Russia, or what's he doing?
Yeah, it does seem a bit of a threat, doesn't it, Paul, to Russia? The president had made it very clear on the campaign trail that he wanted this war in Ukraine ended, and this was something he was going to do quickly. Now that he's in office, he's getting the message it's going to be a bit harder. This war has raged for several years now, so now he is in the face of issuing threats in terms of taxes, tariffs, and sanctions. Taxes be hard to do. Tariffs would be fairly meaningless given that the U.S. now imports less than 1% of goods from Russia a year, really, scaled back over the past several years since that war began. Sanctions is another tool that they could use. However, Russia has been heavily sanctioned by the U.S. There may be things they can do through other countries, for instance, trying to sanction, say, India, who has continued to do business with Russia. But it does appear to be a threat. It appears to be something to try to get the attention of the world and Vladimir Putin.
Well, in terms of strong words, threats, tariffs, one of his favourite tools in the box, it seems he's threatening tariffs against North American neighbours as well. So what's the plan here? What's he trying to accomplish on the trade front?
Yeah, he wants them to play by his rules. And rather than negotiate, he wants to come in from a position of what he sees as strength, saying, if you don't play by my rules, I'm holding this out here. Now, he's already threatened tariffs against Mexico and Canada, said that on day one in his inauguration speeches, but he set a kind of a bit of a squishy deadline, saying, well, around February 1st. And it looks like what he's trying to have them do is sort of pre-negotiate, say, okay, here are things that we would be willing to do in terms of trade to try to avoid those tariffs, perhaps as much as 25% on their goods. Now, it wouldn't necessarily be all goods, but obviously it's a big threat. And this is something that he hopes they can negotiate around. Also, Canada will be having a new government, and this is a message to them clearly as well.
Yeah, and there's some activity on the southern border as well today. We're reporting that the acting defence secretary is deploying 1,500 troops to the Mexican border. What's the intention here?
Yeah, this is part of the executive orders that President Trump has signed and may sign some more about the border, really trying to close down as much as possible the border crossings, which have been down in recent months in any case, but really trying to make sure that it's secure there. And then there's the question of deportations. He has said this was a big campaign promise that there would be mass deportations of people here illegally. Some question as to whether families may be separated, and it looks like he wants to get that apparatus in place. We still haven't really seen much movement on mass deportations, but this is clearly, with these executive orders, something that he wants to try to start accomplishing to close down that border. They've already stopped all appointments for people trying to get immigration status. That has been closed down. The app on that was closed down on day one of his presidency.
All right, Bloomberg Political News Director Jody Schneider there. Other stories that we're following, JP Morgan and Goldman Sachs are pushing back on demands from activists and lawmakers to roll back their diversity initiatives. The CEOs of both banks told CNBC they will continue to promote diversity, equity and inclusion in their workforces. President Trump has signed an executive order limiting DEI and federal contracting as companies including Meta and Walmart roll back their own programs. Bloomberg's learned the ceasefire agreement between Israel and Hezbollah is likely to be extended when it expires next week. Sources say both sides are unlikely to resume full-scale fighting despite not yet implementing the original terms of the truce. The deal gave Israel 60 days to pull out of southern Lebanese villages, with Hezbollah required to withdraw north. Elon Musk is questioning whether the companies behind President Trump's $100 billion AI investment venture can follow through on their promises. The Stargate plan is led by OpenAI, Oracle and SoftBank, and OpenAI chief Sam Altman's hitting back, questioning Musk's motives. So let's bring in technology reporter now, Jackie Davos. Jackie, Elon Musk is concerned, he's casting doubts on the amount of money available, particularly from SoftBank, to build out AI infrastructure. What's his argument here, and why does Sam Altman disagree?
Well, we have to remember that Elon Musk has a competing AI company that rivals OpenAI. So there's a few motives here at play that we can draw upon. But at its core, Musk is raising questions about SoftBank's ability to actually be able to pay for this $100 billion initial investment that is supposed to be deployed immediately, and that's supposed to grow to $500 billion over the next 4 years. It's a large sum of money, and there's reason to doubt because we do know that SoftBank SoftBank only has about $25 billion in cash and cash equivalents in September. Now, the tension here with Sam Altman is quite a long-standing one. They've known each other, obviously, since the founding of OpenAI. And Sam Altman actually refuted Elon Musk's claims that SoftBank didn't have the money and actually suggested that he's only raising this doubt because of his competing company. But he's not the only one to actually express some skepticism. There was also Dario Amodei. He's the CEO of Anthropic, which is also an OpenAI rival. And he said today in an interview with Bloomberg in Davos that the deal kind of came together quite chaotically, he called it, that it's not totally clear who is actually providing the majority of the funding, where it's coming from, and ultimately what the government's role in all of this will be.
Yeah, the remarks from the Anthropic CEO do seem to reflect some challenges in this Stargate project. What's the road ahead?
The road ahead is to kind of look at what the actual progress is on building out some of these data centers. We know that there's already one in construction in Texas, and there's plans for others. This includes not just data centers, but also physical campuses. So there will be physical evidence of whether this is actually panning out and whether Trump takes other actions. You can look at the Biden executive order that was just signed last week that opened up federal lands for potential use for AI data centers. So that's also something that we can expect to see being taken advantage of. But as it relates to who's going to benefit here, it really is in OpenAI's favor. They're the AI company that is going to be really benefiting from this new capacity. You also have partners like Microsoft, Oracle, ARM, also as the key players. But of course, the skepticism is only going to grow. So until we see some of those physical data centers up and running, a lot of this is still yet to be seen.
All right, Bloomberg's technology reporter Jackie Davalos there. We have more ahead on the Asia trade. This is Bloomberg. This is the Asia trade. Other geopolitical stories that we're following. Argentine President Javier Milei has praised President Trump's promise to return America to a golden age. Speaking to us in Davos, Milei said Trump's use of tariffs was strategic and not protectionist, and he would consider exiting a South American trade bloc to secure a free trade deal with the US. Milei also spoke about building closer ties with China.
We've had some very fruitful meetings with the Chinese embassy and with Xi Jinping, a meeting which we had in Brazil during the G20 summit. And we consider that our economies are complementary and that there's a lot for us to do together as great trade partners.
China has suspended soybean imports from some of the top exporters in Brazil due to what it calls sanitary concerns. Units of Cargill, Olam and Archer Daniels Midland are among those affected. However, traders can still ship to China from other registered entities. The suspension is part of China's efforts to curb food imports and support local farmers. We're more ahead on the Asia trade. This is Bloomberg. Well, let's get back to one of the big stories this hour. SK Hynix reporting a record quarterly profit. This is NVIDIA's main supplier of high bandwidth memory, reporting an operating profit of 8.08 trillion won. That's $5.6 billion. It was pretty much in line with analyst estimates, a little bit better than expected. In fact, sales in line with estimates as well. And SK Hynix shares have been on a stellar run. They're up almost 30%. Just this year alone, and it's only the 23rd. All right, joining us now is Sanjeev Rana, head of Korea research at CLSA. Sanjeev, I just want to start with your initial reaction to what appears to be a very strong set of numbers.
Yes, results were strong, but still in line with our expectations. It's just that the net profit of 8 trillion won was a bit ahead of the consensus expectations. That's due to forex gains and some asset sales. But overall, at the operating level, numbers were in line with expectations.
Yeah, you mentioned the forex gains there. To what degree is this making a good number look really, really good? Because the Korean won's been pretty weak against the greenback.
Right. So the total forex gain was about 0.6 trillion won. So yeah, it did contribute to overall, earnings beat at the net profit level. But market usually is going to look beyond this. For SK Hynix, it's the operating earnings that matter the most. And I would say the results were good, but still in line with expectations.
So we heard yesterday from President Trump announcing the Stargate project. Obviously, this has further fueled enthusiasm around the AI story. To what degree do you see SK Hynix as being a potential beneficiary of these plans?
I believe SK Hynix will be a big beneficiary, like the total investments of $500 billion over the next 5 years. That translates into higher demand for AI hardware that includes GPUs, networking equipment, data center investments, and of course, a high bandwidth memory where Hynix has a leading share globally. We expect Hynix to maintain their dominance of this high bandwidth memory segment in the years to come, and it will be a big beneficiary of these investments.
Yeah, of course, SK Hynix has a big lead over its rivals in this space as well. But what sort of capex do you anticipate from SK Hynix in order to keep this lead? And do you see competitors catching up?
I think it will not be so easy in the near term. They have a significant lead, whether it's in terms of the product quality or the production yields, even in terms of production process. And I think it will take some time for competitors to catch up, at least like for the next iteration of HBM, which is HBM4, expected to be launched in the second half of this year and likely to be used in NVIDIA's Rubin GPUs. We expect Hynix to be the first supplier to NVIDIA for HBM4. And that, as well as its very strong position in the currently being produced HBM3E 12 stack products, means that their overall HBM shipments could rise like 90 to 100%. And the same for their HBM revenue this year could increase by 100%.
Debt also seems to be under control. Can you see a scenario where SK Hynix has cash on hand in the coming months, and how might that be deployed?
Yes. So in the fourth quarter, the company's net debt declined to about 8.5 trillion won versus 11 trillion won in the prior quarter. So that's a significant reduction. So net debt to equity ratio was down to 12% versus 17% in 3Q. And at this pace, we expect company to turn net cash in the second half of the year. Part of the net cash in the coming quarters, or in 2026 could be used to boost the company's shareholder returns. And some of it could be used for M&As.
We also saw a moment ago the screen for analyst ratings on the stock. A lot of enthusiasm around it. 40 buys, 2 holds, just the 1 sell. Do you expect to see any re-weighting here after today's results?
Yeah, I mean, SK Hynix stock has performed relatively well in the last 2 years, driven by their improving position in high bandwidth memory. But also, we think in the coming months, the conventional memory that includes DDR5, DRAM, and NAND is expected to improve significantly. Currently, we are going through a down cycle. ASPs are falling for conventional memory that's used in applications such as is mobile and PCs. But we expect things to turn around from, let's say, in the second half, driven by restocking demand from like PC OEMs and smartphone OEMs. Recently announced handset subsidies in China are positive for the restocking demand. Meanwhile, on the NAND side, a lot of suppliers have announced production cuts, and this will result in more balanced demand supply in the second half of this year. So we expect conventional DRAM ASPs as well as NAND to move significantly higher in 2025, in second half 2025, and this upcycle could extend to 2026 as well. So we expect strong earnings delivery from the company in the coming quarters.
All right, Sanjeev, Rana, head of Korea research at CLSA. Staying in Korea, the corporate battle to control the world's largest producer of zinc is coming to a head. Korea Zinc's shareholders set to vote today on a new slate of directors. That's not only going to shape the company's future, but also the global market for an ingredient that's crucial in applications, including EV batteries. For more, let's bring in Bloomberg News Seoul Bureau Editor Denny Thomas. So, Denny, a very important day for Korea Zinc. How do we see this shareholder vote unfolding?
Well, hey, yes, this has been in the works for nearly 4 months now. The battle came into public in mid-September. There's two factions to it. And up until time, Korea Zinc, even though it's the biggest refiner of zinc, was flying pretty much under the radar. What has happened since then is there is two families that founded the company, and one of the founding members of this company has now been sidelined a bit, and they teamed up with a local private equity to launch this hostile bid. And since then, the two sides have been fighting to gain control, and either side has not succeeded. And they finally, the faction which is backed by private equity, they called an EGM today. So it's all coming to a head today. We will get to see whether the faction controlled by or backed by private equity will get control of the board. And if that happens, that will be a big moment because the current management has tried to convince shareholders to back them. And if that doesn't happen, eventually the CEO would have to kind of step down and make way for a new board, and that's how it'll shaping up. We still don't know how the 24% remaining minority shareholders will vote. There's a good chance that the CEO and the current management will be able to convince the shareholders to back them. But if that doesn't happen, it will be a big day, a big moment to call out in Korea.
Well, regardless of the outcome, what are the potential implications for the market, for the stock price, and also Korea Zinc's suppliers and customers?
Yes, so for the market, the company has clearly warned that because of these tensions, the management and the employees are distracted, and they have come out with a pretty stark warning. If this doesn't end, the company's performance will take a hit. So that's one thing for the market. The suppliers for now are not much concerned. They're keeping a very close eye in terms of how Korea Zinc continues with its plans to. They're one of the biggest producers of the metals we require for green transition. So the big question is whether if the faction backed by private equity comes in, would they continue with the same amount of expansion, or they cut down on that and take more dividends? So that is a concern some people have in the market. If a private equity comes in, what kind of expansion will this company continue with? So those are the two aspects on the market side. And on the stock, it has had a very stellar ride, and also a pretty choppy market for them because of the limited stock that is out there in the floating. So that has been a bit of a concern. If MBK comes back, some people think that they may have to pay more to keep buying shares on the market. So that might be a supporting factor.
All right, Bloomberg's Denny Thomas there. Well, the CEO of chip designer ARM says the multi-billion-dollar AI initiative unveiled by President Trump has solid financial backing. And that's after Elon Musk questioned how much money was available to fund the project, including from major ARM shareholder SoftBank. Rene Haas told us more about the infrastructure plan, which is known as Stargate.
ARM will be the CPU of choice, if you will, inside these AI data centers. We power Grace Blackwell, which is the NVIDIA product that will be used, but lots of opportunity for all kinds of ARM technology. But most importantly, the CPUs that power Stargate, they'll be ARM.
So already, as you say, integrated into Grace Blackwell, what sort of innovations could this stir on your side? What way will we see your designs progress into this supercomputer and more to come, maybe?
$500 billion of investment and multiple gigawatts of energy require incredibly efficient processor solutions. So I think as we go forward, as these plans get more and more defined, I think there'll be more and more opportunity. But right now, we're super excited to be involved with NVIDIA and Grace Blackwell.
I think that's so key as these plans get more and more defined. These are, at the moment, pretty new announcements coming, but people questioning how new the ultimate decision to spend has been, because we already had Massa, of course, this leader of SoftBank, which in many ways owns a large part of ARM, talking about this $100 billion investment in infrastructure in the US, but a few weeks ago. How long has this been in the making?
These discussions have been going on for many months. Something like this does not happen overnight. I think the world has seen that to reach AGI or ASI or some of the capabilities of artificial intelligence, a tremendous amount of capital is going to be required. Obviously, a lot of power is going to be required. A lot of compute is going to be required. Massa has been looking at this for quite some time. We've been talking to the OpenAI folks and Oracle and MGX and Microsoft and NVIDIA. So I think what you're seeing that just came together was the culmination of all those conversations, but it didn't happen overnight for sure.
Does it have the money? I'm afraid some shade being thrown on this project by one Elon Musk. Do you have anything to provide? I know you're the technology partner, but what about the capital?
Yeah, I haven't seen Elon's tweet, although I certainly have heard about it. There is a lot of backing for this, Caroline. Believe me, it was not taken lightly to make the announcement yesterday at the White House with President Trump. So I think you can feel pretty good that the financial backing behind this is quite solid.
That's ARM CEO Rene Haas speaking with Bloomberg technology co-anchor Caroline Hyde. Let's get the latest now from the corporate front. Bloomberg has learned that Google is backing AI developer Anthropic with an additional $1 billion, building its stake in one of the most promising rivals to OpenAI. The new funding comes in addition to more than $2 billion that Google has already invested. Meanwhile, Anthropic CEO Dario Amodei says the Stargate AI infrastructure plan unveiled by President Trump appears chaotic. Data software provider Databricks says it's raised more than $15 billion from companies including Meta Platforms and the Singapore and Qatar investment funds. Databricks is one of the world's most valuable privately held tech companies, and it's one of the few of that size that's avoided an IPO. Its latest private funding round was a Series J, much further into the alphabet than most startups ever reach. Up next, Ukrainian President Zelenskiy is calling on Europe to unify its security and defense policies. Hear his exclusive interview with us on the sidelines of the World Economic Forum in Davos. This is Bloomberg. Let's take a look at how some key commodities are tracking at the moment. We've seen oil slipping just a little bit. Your crude 75.23 at the moment. A bunch of factors for traders to digest there, including potentially more sanctions on Russia from the United States, also tariff risk on China and the European Union. That could crimp demand. So plenty to think about there. We did hear from Santos earlier, the oil and gas producer here in Australia, seeing forecast production of 90 to 97 27 million barrels of oil equivalent. Santos shares rising right now about 1.5%. Taking a look at iron ore, gamely holding on there above $100 a tonne. Not a lot of movement in that price. We also heard from pure play iron ore exporter Fortescue earlier with its production shipments rising 1% last quarter on the year before. Well, Ukrainian President Volodymyr Zelenskiy says any effective peacekeeping force in Ukraine must include US troops, as the backing of only European allies won't be enough. Zelensky spoke exclusively with Bloomberg at the World Economic Forum in Davos.
It's great if we will have troops. But we have to understand that the troops will not be in the center of the capital. Yes. They will not have relaxed time. Yes, it's very important, because I heard that some allies said that, yes, but it's okay, we can be in the center of some city, and then no, we don't need such contingents.
You want them
no.
Line.
Yes, with our people, of course. Yes, because this means security. And that's it. So, but it can't be. It can't be without the United States. I will explain you why. Even if some European friends think that it can be, no, it will not be. First of all, nobody will risk without the United States. The second, that's what can divide NATO, divide EU and USA. That is a goal and dream of Putin, to divide this unity.
You mentioned China. How important is China in these negotiations? I mean, China is the backer of Russia. They seem to have had an impact on things like Putin not using nuclear weapons, those sort of things. Can China push Putin? And do you have any contact with the Chinese?
I had some contacts with Xi Jinping. We had phone call during the war. Not too much, not enough, I think. Yes, he can push Putin to peace, I'm sure. I think that only President Trump is the strongest, and Xi Jinping. I think that there is no other allies who can really do it. Yes, because his economy, Putin economy, after sanctions, after everything, depends very much of China.
You would like Donald Trump and Xi Jinping of China to work together to push
I think
push
yes.
Putin.
Yes, but not without us.
Not without
it's important.
Ukrainian President Volodymyr Zelenskiy speaking exclusively at Davos with Bloomberg's editor-in-chief, John Micklethwaite. More ahead on the Asia trade. This is Bloomberg. Getting some breaking news out of Japan. Trade data for the month of December, and it's a pretty handy beat as well. We were expecting a deficit of 68.5 billion yen. Instead, the trade balance flipping to surplus, 130 billion yen. So a very healthy trade surplus there for Japan in December. Exports rising at 2.8%. That was more than expected, but a big contraction in imports. The market was expecting 3.2%. We got 1.8%. Japanese shipping company Mitsui O.S.K. Lines is seeing more investment opportunities both in the green energy sector and in the US. CEO Takeshi Hashimoto spoke exclusively with Bloomberg, also at the World Economic Forum in Davos.
The first, the government of Mr. Trump was not too bad for the shipping industry. Of course, there are so many uncertain issues that happened, but at the end of the day, that we could relatively enjoy the good market to some extent. Therefore, I do not worry too much about that.
You're not worrying too much, but you see investment opportunities, especially in the U.S.?
Yeah. That in past several years, that we rather focused to that new energy or renewable energy or blue projects, green projects, and but in the future, we also refocus the energy projects, energy-related projects, especially that related to gas and LNG projects. They're quite critical and important for our industry.
Is there a time frame when you talk about the energy focus and the investments that you could be making?
Yeah, my feeling is that for coming 1-2 years will be quite critical for us. So we are ready to think about that the investment opportunity.
Company CEOs and government officials are focusing on Trump tariffs, and we heard just today that Trump may impose a 10% tariff on China as soon as next month. What spillover effects might we see?
Yeah, that still a little bit too early to judge. However, that the global trade is not so simple, so that perhaps that it will slow down a little bit for that China-U.S. trade. However, likewise, what happened in the last time, that the alternative trade will be stimulated, like for other Asian countries to U.S. or China to Europe or something like that. Therefore, I'm relatively optimistic about that.
During the first Trump administration, when he imposed tariffs on China, we saw an increase in freight rates, as well as the impact on imports. Might we see the same?
Yeah, the end result is still not so clear because so many different factors will create the price mechanism of the shipping freight. However, maybe you are right that it will create some the pressure to increase the market.
Are you concerned, though, that there could be repercussions on the global economy?
Yeah, that is a bit problematic. That of course, as long as the total global economy will move on as usual, it should be fine. But if the tax issues, tariff issues, will create the negative impact to the total global economy, then we'll have a difficulty.
It's MOL CEO Takeshi Hashimoto with Bloomberg's Haslinda Amin in Davos. Keep an eye on these stocks when trade opens in Korea shortly. SK Hynix, of course, after it posted a record quarterly profit, and Samsung following the Galaxy S25 Edge launch. Also, Korea Zinc shareholders set to vote on the company's future direction. Market opens in Seoul and Tokyo coming up next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. Of course, after another AI-fueled rally over on Wall Street, Paul, we were watching those AI names, especially as we see that infrastructure build-out. And here in the Asian region, we do have SK Hynix reporting earnings.
Yeah, plenty of tailwinds for SK Hynix, not just from those AI announcements, but also its own results, which were pretty strong on the face of it. We also just had some blowout trade numbers from Japan as well, so plenty of news flow in Asia today.
Yeah, exports beating expectations here in Japan and the trade balance turning to a surplus instead of an expected deficit. We are watching the Japanese yen very closely, of course. That has implications for where trade goes from here. Right now, we are seeing some stabilization in the currency, but we had seen some downside pressure in the overnight session ahead of the Bank of Japan policy decision. The expectation is for that Friday meeting to result in a 25 basis point rate hike. You can take a look at the Nikkei right now, gaining now for a fourth consecutive session. And we're seeing the Japanese 10-year JGB yield at very close to that 120 level. But the news flow really strongly on Korea, as we talked about SK Hynix results, a record quarterly profit, not to mention that the stock has already gained about 30% this month alone. So we'll be watching that trading session today. A little bit of downside pressure, perhaps a little bit of sell the news kind of situation as we got those numbers coming broadly in line with expectations and beating slightly to the upside. We're also watching Samsung because they released smartphones with AI-powered features. Watching the currency right now, holding steady at the moment. Korea is expected to sell 20 trillion won of special bonds in order to support and stabilize the currency. Of course, that economy under a lot of pressure right now. Fourth quarter GDP missing to the downside. You're seeing the Kospi losing 0.2%.
Let's take a look at how we're tracking here in Australia. We've been trading now for a little bit over an hour, seeing a bit of softness on the local market, a bit of weakness also for Fortescue Metals. It's off about 1.3% at the moment. Fortescue was out a little bit earlier with production numbers. We did see iron ore shipments rising 1% in the last quarter, retaining full-year guidance there. Another stock we're watching is Santos. That's up by about 1% after also reporting its production numbers. But overall, the index a bit weaker by about 0.5%. We take a look at yields now trading in Japan. They're stabilizing somewhat. There seems to be some relief that tariff announcements from the US have been delayed pending a study. We're going to get US jobless claims data tomorrow. And of course, we're looking ahead to a Fed decision next week. The 10-year right now at 4.6, just a shade above 4.6. We're seeing the oil price slipping a little bit as well. A lot of factors for traders to consider here, Shery, including more sanctions potentially on Russia from the US, also tariff risks for China, the European Union. That might crimp demand going forward.
Yeah, Paul, our next guest, in fact, sees more inflationary pressures arising from Trump's new policies. Joining us from Seattle is Todd Jablonski, CIO and Head of Asset Allocation at Principal Asset Management. Todd, great to have you with us. Of course, we don't necessarily have any concrete tariffs as of yet, just a lot of talk about potential tariffs coming up, not to mention those sanctions potentially on Russia. But the fact that we do have asset prices priced to perfection, JP Morgan's Jamie Dimon saying that asset prices are kind of inflated. How much is that a risk?
Well, high asset valuations don't necessarily preclude another good year for risk assets. You know, if that were always the case, we would have had a hard time in 2023 and in 2021, a lot of areas of high valuations. Now, today, you do see that globally, U.S. Global equities have been cheaper 94% of the time using data going back 20 years. So you're right, that premium exists. But I think there's a fundamental case for revenue and earnings growth that can deliver to support the kind of valuations we have in today's markets.
The concentration doesn't concern you. Most of the S&P 500 companies overnight, for example, fell despite the fact that the levels were broadly up.
I know it's interesting as you do see that handful of names at the top of the market really move indices and move perceptions of the market. Particularly December last year, I'd point out, was a very difficult time in most asset classes, including small caps in the U.S. But that was kind of masked by some of the stronger performance at the top. I do note going forward, we are neutral between large, mid, and small U.S. equities in our multi-asset portfolios. While we do think the secular run of exceptionalism of those mega cap trends is there, today's extreme valuations at the top mean that mids and smalls we think are of equal attractiveness as well.
Todd, we've just had some good numbers from SK Hynix. We've got SoftBank shares performing pretty strongly over the past couple of days, both connected to this AI story out of the US. Do you see some opportunities in Asia around some of these AI-linked names?
Oh, no doubt. We also, of course, see opportunity in Taiwan is in the clearest place in Asia, where you can play some of the AI trends. But I do note, you're right, it comes across in other markets as well. You find that's in Korea. You also find increasingly that you're going to find opportunities across not just pockets of the EM space, but I also like to see Japan, I think, come through in a lot of high expectations. You know, that's been a developed market economy where you've seen, in fact, the resurgence of inflation. You know, people are looking actually at the central bank there and how they respond to inflationary forces. And that's, I think, motivated and stimulated the economy a bit. And I think given it an advantage over Europe, you know, from a global investment perspective, a lot of investor enthusiasm, I think, around the Japanese story.
We've got a Fed decision coming up next week, but it feels like we're not talking about it very much. It's really taken a back seat to this broader theme around strong earnings, around the growth story as well. Is this a positive thing that rates are not the key driver anymore?
Well, at the beginning of the year, you're correct. The perception was that the Fed put would save investors, that you'd see that central Fed easing led by the central bank of the U.S., the Fed, that would take us to easier monetary conditions and easier financial conditions. Now, to date, you see some of those expectations temper. Investors today are pricing in about 2 cuts for the year versus 4 they had perhaps even at the beginning. Now, we're fine from an investment standpoint, not relying necessarily on central bank easing. That can be a way forward, and through that fundamental improvement for spreads to remain tight on credit land and what you see on equities, the sales and earnings growth, both coming through with a kind of fundamental support that allows investors to continue, again, what's been a remarkable 3-year run for risk assets that is reliant, of course, on and avoiding exogenous shocks to those markets, and geopolitical risks are indeed running a bit higher than normal.
We have a really remarkable run for Japanese assets as well after decades of being in the doldrums. When it comes to the Japanese story in 2025, will it be about the Bank of Japan? Will it be about yen strength? A lot of these things are really not in Japan's control, especially given the Fed variable here.
On the Japanese story, too, I think you're looking at shareholder return and return of capital to shareholders. That can come in the form of dividends, and that can come in the form of buybacks. We think buybacks in particular have been impacting the Japanese case. They are supportive for investors there. And I think the currency is also well positioned vis-a-vis other DM markets to perform and give some stability while you find increased currency risk really globally.
The currency risk right now for Japan is it to the upside or downside? We continue to see weakness, but at the same time, given the uncertainty globally, I do wonder if we will in fact see a return of these safe haven flows.
I think you pointed in the correct direction. The yen has often been perceived as global investors as a safe haven denomination, and that perception is well earned. I think by the behavior and the fiscal and monetary policies of Japan. So that supports that stability asset, that stability behavior pattern. And we think, yes, perhaps there is upside potential left in the yen from here, particularly in the case of getting, again, any kind of exogenous shock to either rate expectations or earnings expectations.
Todd, I just want to get your views on the oil price as well. Of course, we've heard the intention of President Trump to, quote, drill, baby, drill. What's your outlook for prices from here, and do you see a risk of a glut?
Well, we're underweight commodities across our global multi-asset franchise, and a lot of that has to do with oversupply. You do see, indeed, quite a bit of supply coming online and promises from the United States and President Trump to enable additional supply added to that mixture. When you put that on top of, yes, growing, but not as quickly demand, that does portend, perhaps negative demand for energy amid the overall commodity complex. Now, there are spots in particular, such as gold, within that same commodity complex, where I think you do find more attractive secular forces and features that point to perhaps a more nuanced implementation across that complex of commodities.
Right, Todd Jablonski of Principal Asset Management, you're staying with us. Do stick around. There's plenty more to discuss. But at the moment, we're checking also those tech names, especially in South Korea, as we got SK Hynix now recording that record profit given the AI infrastructure boom that we're seeing right now. Perhaps a little bit of that sell the news situation, given that we have seen this company surge about 30% this year, adding to 20-plus gains already last year. Samsung Electronics under a little bit of pressure, but Paul, really we have seen, of course, that rivalry between SK Hynix and Samsung a little bit falling behind SK Hynix when it comes to those advanced chips, HBM, and right now the expectation is that market of high bandwidth memory could amount to $130 billion. So who takes a piece of that pie is a key question. It seems SK Hynix at the moment is in the lead, Samsung a little bit behind, but Samsung doing pretty well when it comes to its phones. It's just launched 3 new Galaxy S25 smartphones with AI-powered features.
Yeah, and on the subject of those phones, the dimensions of them also becoming a subject of discussion as well. The plan is to have the Galaxy S25 be ultra thin. It's also going to have a thinner edge, a thinner profile, and this is to get in front of Apple, really, which is also expected to add an ultra-thin version of its iPhone later on this year. So a few design changes there to try and entice consumers. So the slimmer S25 Ultra are going to be available later this year. More ahead on the Asia trade. This is Bloomberg.
Take a look on how we're trading into some big names across Asia right now. A little bit of divergence with those Japanese names like Tokyo Electron, Renesas gaining ground. We're seeing broader upside for both the Nikkei and the Topics at the moment, with Japanese markets ahead of the Bank of Japan policy decision on Friday. SK Hynix and Samsung to the downside. We have seen, of course, that posting of record quarterly profit for SK Hynix. Samsung Electronics also unveiling a few new smartphones with AI features. But it's really about the growth prospects for the future, right? Especially when it comes to the build out of AI infrastructure and what it will take for that build out, especially when it comes to high bandwidth memory, which now Bloomberg Intelligence thinks that it can grow at an annual rate of 40% to reach sales of $130 billion in 2033. The CEO of chip designer ARM now saying that the multi-billion-dollar AI initiative unveiled by President Trump has solid financial backing. That's after Elon Musk questioned how much money was available to fund the project, including from major ARM shareholder SoftBank. Rana has told us more about the infrastructure plan known as Stargate.
ARM will be the CPU of choice, if you will, inside these AI data centers. We power Grace Blackwell, which is the NVIDIA product that will be used, but lots of opportunity for all kinds of ARM technology. But most importantly, the CPUs that power Stargate, they'll be ARM.
So already, as you say, integrated into Grace Blackwell, what sort of innovations could this stir on your side? What way will we see your designs progress into this supercomputer and more to come, maybe?
$500 billion of investment and multiple gigawatts of energy require incredibly efficient processor solutions. So I think as we go forward, as these plans get more and more defined, I think there'll be more and more opportunity. But right now, we're super excited to be involved with NVIDIA and Grace Blackwell.
I think that's so key as these plans get more and more defined. These are, at the moment, pretty new announcements coming, but people questioning how new the ultimate decision to spend has been, because we already had Massa, of course, this leader of SoftBank, which in many ways owns a large part of ARM, talking about this $100 billion investment in infrastructure in the US, but a few weeks ago. How long has this been in the making?
These discussions have been going on for many months. Something like this does not happen overnight. I think the world has seen that to reach AGI or ASI or some of the capabilities of artificial intelligence, a tremendous amount of capital is going to be required. Obviously, a lot of power is going to be required. A lot of compute is going to be required. Massa has been looking at this for quite some time. We've been talking to the OpenAI folks and Oracle and MGX and Microsoft and NVIDIA. So I think what you're seeing that just came together was the culmination of all those conversations, but it didn't happen overnight for sure.
Does it have the money? I'm afraid some shade being thrown on this project by one Elon Musk. Do you have anything to provide? I know you're the technology partner, but what about the capital?
Yeah, I haven't seen Elon's tweet, although I certainly have heard about it. There is a lot of backing for this, Caroline. Believe me, it was not taken lightly to make the announcement yesterday at the White House with President Trump. So I think you can feel pretty good that the financial backing behind this is quite solid.
That's the ARM CEO Rene Haas speaking with Bloomberg Technology co-anchor Caroline Hyde. Let's get back now to Todd Jablonski, CIO and Head of Asset Allocation at Principal Asset Management, joining us from Seattle. Todd, certainly the announcements of Project Stargate yesterday generating a lot of excitement, but also some skepticism as well, even from those within the industry. The Anthropic CEO calling it chaotic, Elon Musk casting some doubt over whether the funding's even there. But setting all of that aside, what is the market impact here overall?
Overall, I think that project just signals a continuation of remarkable spending and investment cycle. Whether this goes back to sort of the build out of wireless towers that I recall, sort of, and whether the capital spend that happened there and the payoffs today. Or when you think of sort of like the capital spend that went through to cloud computing that's still taking place today and all the expenditure that went with it, right? There's a promise that there's always going to be a profitable business on that. On both of those two examples, that's come to fruition. Now, on a go forward from here, you're seeing that government policy, yes, supports, again, an aggregate spending cycle of technology infrastructure by perhaps there are, in fact, many distinct investment ways to play, not just common equities, but also infrastructure investments, real estate investments, many ways for investors to participate in this secular theme around AI and computing power.
Yeah, let's talk about that a little bit more, because some of those big names in the space, like NVIDIA and the rest, are looking very expensive at the moment. What are some of the names elsewhere in these sort of AI adjacent spaces that people might prefer to look, even less exciting sectors, say, such as utilities?
Yeah, as an asset allocator, I tend to think of investments, not at the individual issue name, but more in the category level and what they can bring to a multi-asset investment strategy. Now, from a real estate perspective, I think that's where you find some of the most interesting ways for investors to participate in the build-out of data centers and AI. At Principal, we have a robust, I think, set of opportunities to participate in data center construction, ongoing management, all done in a way that we think allows investors, whether on the equity side, the debt side, to find ways for growth and income through a variety of those structures. Now, that supports, I think, what is a healthy outlook for growth, again, across that utilities sector and some of the other more liquid, more capable markets of real asset investing that we can combine with multi-asset approaches to give investors a smoother ride through some of those real assets towards their retirement and other goals.
Todd, as we're speaking, SoftBank now trading in the Tokyo session, gaining more than 4%. We're talking the highest level since July of last year, and adding to that 10% gain that we saw yesterday as well. Just coming off Paul's question on adjacent sectors that might gain, like utilities, power companies that, of course, fuel this AI boom. What about just broadly speaking, companies that are able to take advantage of the efficiencies that artificial intelligence will bring in the next few years? Are there any sectors or specific companies that you have identified that could take advantage of this?
Well, no doubt, as you think across the spectrum of investments where efficiency gains make sense, it has a lot to do in those areas where the businesses are most scalable. So I highlight that investors should look for scalable industries, economies of scale playing the pivotal role in how you see those firms operate. That's where efficiency gains are most pronounced in terms of the fundamental impact to the businesses. I'd also highlight on finance. I think that's a particular area where you see AI getting quick adoption across a range of features that's giving individual winners and losers opportunities to distance themselves. That's where we like to deploy active management, I think, increasingly to separate those winners and losers, gives us a unique return profile. But I highlight again, scale businesses and finance as being the key areas to focus on AI adoption.
Todd Jablonski, good to have you with us, Principal Asset Management. And other tech stories that we're following at the moment, Bloomberg has learned that Google is backing AI developer Anthropic with an additional $1 billion, building its stake in one of the most promising rivals to OpenAI. The new funding comes in addition to more than $2 billion that Google has already invested. Meanwhile, Anthropic CEO Dario Amodei says the Stargate AI infrastructure plan unveiled by Trump appears chaotic. Data software provider Databricks says it's raised more than $15 billion from companies including Meta Platforms and the Singapore and Qatar investment funds. Databricks is one of the world's most valuable privately held tech companies and one of the few of that size that avoided an IPO. Its latest private funding round was a Series J, much further into alphabet than most startups ever reach. More ahead on the Asia trade. This is Bloomberg. Mizuho's president and group CEO Masahiro Kihara is optimistic that the Japanese megabanks will be able to push net income past yen 1 trillion within 4 years. Kihara spoke exclusively from the World Economic Forum in Davos on what's driving that growth.
There are 3 areas that is rewarding, actually. One is Japanese corporates. And we can talk about this more later, but the momentum in Japan is changing dramatically, I think. And the CEOs are willing to invest. And we see a lot of our corporate actions coming in, not only in the blue chip, but also in the mid-cap sectors. So that is a bright area. Another is asset management and wealth management. The attitude toward investment is changing dramatically in the individuals. So that's another bright spot. And the other one is our global corporate and investment banking platform that we have. And if the regions can collaborate, that will definitely expand our revenue.
So a lot of sources for revenue. Can you put a number to how much growth you might see in profit?
Yeah, so this year we will be aiming for after-tax profit 820 billion yen. I think in 3 or 4 years we should aim 1 trillion yen after-tax profit.
That's Mizuho Financial President and Group CEO Masahiro Kihara speaking exclusively with our colleague Haslinda Amin from the World Economic Forum in Davos. Let's take a look at some of the movers here in Australia. Start off with Fortescue. This is a pure play iron ore stock off about 1.5%. Fortescue was out earlier with production numbers. Iron ore shipments rising, but look, there is a concern here that as demand from China begins to wane, Fortescue might be contributing to a glut here, and iron ore is its only product as some of its peers pivot to copper, which is performing a lot better. Santos, meanwhile, still up 0.4%. It's off some of the earlier gains that we saw. Santos projecting a rise in annual oil and gas output. It's projecting 90 to 97 million barrels of oil equivalent in 2025 and pivoting to a new capital allocation framework. Aims to return at least 60% of free cash flow to shareholders from 2026, so that's stock up in Australia. We've got more ahead on the Asia trade. Stay with us. This is Bloomberg. Let's take a look at some of the key commodities that we're tracking today. Iron ore gamely holding on, 104.10 cents a tonne traded out of Singapore. We did hear from Fortescue a bit earlier, as I mentioned, production increasing 1%. So let's see how sustainable that price is as demand from China begins to wane. Crude prices, there's a lot to consider for the oil market here. Of course, tariff risks for China, the EU, that could crimp things on the demand side. On the supply side, a pledge from President Trump to drill, baby, drill. And then, of course, there are the prospect of even more sanctions on Russia. Let's talk about that a little bit more. President Trump pledging to step up pressure on Russia to negotiate and end the war in Ukraine. He says Vladimir Putin should make a deal soon or face additional taxes, tariffs and sanctions on Russian imports. Let's get to Bloomberg News editor Michael Heath now. Mike, what more is left on the table in terms of applying pressure on Russia?
Yeah, I mean, not a great deal, Paul. That's the reality of it. And as to tariffs, it's sort of irrelevant because Russia doesn't export much in general, and certainly not to the US. There has been talk of the incoming Treasury Secretary mentioned perhaps targeting the oil producers in Russia. So, I mean, there are avenues they can exert more pressure on, but basically Russia has shown that it can withstand this. what's sort of interesting, and President Trump also mentioned this, is that he was talking about inflation in Russia. And what is happening there is their economy is overheating really badly. And that a lot of economists suspect that the official inflation rate is much higher than what they're showing. The currency had a very poor year last year. So there's pressures in the economy, but whether much can be done externally is difficult to see. What I think he's going to find that he has to do is he's going to have to bolster Ukraine more, and that sort of contradicts a lot of the campaign promises. So it's going to be an interesting one to see how he squares it.
In terms of contradicting campaign promises, that the pledge on the campaign trail was to end the war in one day, not really looking realistic. What is realistic?
Yeah, well, I mean, that is exactly right. And they have been backing off, in fairness to them, since then. I mean, it was a fairly extreme what he was saying. But realistic in the end is that Ukraine needs security guarantees. I mean, President Zelenskiy of Ukraine, he's a master in terms of managing the West, in terms of public relations, in terms of knowing where to how to operate with people. And he's praised President Trump with, his drilling, because more oil coming out of the US reduces the oil price, hurts Russia, etc. So he's on the right track there, but he's really going to need some sort of security guarantee because, you give Russia a break, there's every chance they come back again, and Ukraine is just left vulnerable. And what a lot of analysts say is that Ukraine needs to be some version of West Germany where, it loses some of its territory, you have to make a deal, so you have to give something up, but it guarantees that it will be a viable state after that. That's going to take time. And again, you sort of had President Putin and President Xi in China cozying up again, and China's been really, really supportive of Russia in terms of its economy. So it's there's a few angles there he needs to try to bring together as well.
And we had a chance to hear from Ukraine's Zelenskiy himself speaking to our editor-in-chief, John Micklethwaite, right? I mean, what did he have to say about needing to see some security guarantees ahead of talks with Russia?
Yeah, Shery. He wants to see US troops among the peacekeepers, and he's right there. I mean, there's been talk that perhaps it could just be Europeans, etc. But at the end of the day, it's the US that's the power broker here. And when we were talking about contradictions with Paul there, that one of them is that Donald Trump doesn't want to put more US boots on the ground anywhere, let alone in Ukraine, which he's been very critical of the conflict and US support for that. So that almost seems like a non-starter. But the reality here is that history under President Putin, it's sort of showing that the one thing that he won't tamper with or tackle with is NATO. So if you were in some way to find a way to bring Ukraine into NATO, again, that contradicts what President Trump has suggested. He doesn't want to do that. But if you did that, then you'd guarantee Ukraine's security. That's the simple answer here. Whether they can get to that is a whole different question.
How much communication is there between Zelensky, Ukraine, and the Trump administration at the moment?
Well, he met with President Trump last year, and he's obviously there's an envoy that President Trump has appointed, who's actually saying some fairly sensible things about the conflict in terms of ensuring that Ukraine can stand up for itself here, so that any negotiations don't end up being lopsided. And the other thing that Zelenskiy's done is he's said he's ready to talk, he's ready for peace. He's saying all the right things. So really it's the ball's in Russia's court, whether, President Putin has similarly said he'll talk, but Russia's not going to be a simple, it's just not going to be a simple negotiation here. There's no doubt about that.
Yeah, Bloomberg News editor Michael Heath there with the latest on that ongoing conflict. Let's in fact hear directly from Ukrainian President Volodymyr Zelenskiy. He spoke exclusively with Bloomberg at the World Economic Forum in Davos.
It's great if we will have troops, but we have to understand that the troops will not be in the center of the capital. Yes. They will not have relaxed time. Yes, it's very important, because I heard that some allies said that, yes, but it's okay, we can be in the center of some city, and then no, we don't need such contingents.
You want the front line?
Yes, with our people, of course. Yes, because this means security, and that's it. So, but it can't be without the United States. I will explain you why. Even if some European friends think that it can be, no, it will not be. First of all, nobody will risk without United States. The second, that's what can divide NATO, divide EU and USA. That is a goal and dream of Putin, to divide this unity.
You mentioned China. How important is China in these negotiations? I mean, China is the backer of Russia. They seem to have had an impact on things like Putin not using nuclear weapons, those sort of things. Can China push Putin, and do you have any contact with the Chinese?
I had some contacts with Xi Jinping. We had a phone call during the war. Not too much, not enough, I think. Yes, he can push Putin to peace, I'm sure. I think that only President Trump is the strongest, and Xi Jinping. I think that there is no other allies who can really do it. Yes, because his economy, Putin economy, after sanctions, after everything, depends very much of China.
You would like Donald Trump and Xi Jinping of China to work together to push
I think yes.
Putin.
Yes, but not without us. It's important.
Ukrainian President Volodymyr Zelenskiy there, speaking exclusively at Davos with Bloomberg's editor-in-chief, John Micklethwaite. And we'll have much more coming up from the WEF in Davos. We're going to be speaking to global leaders, including French Minister for Foreign Trade, Laurent Saint-Martin, and Iraqi President Abdul Latif Rashid. So stay tuned for those interviews on Bloomberg Television. Other global geopolitical stories that we're following. Bloomberg's learned the ceasefire agreement between Israel and Hezbollah likely to be extended when it expires next week. Sources say both sides are unlikely to resume full-scale fighting, and that's despite not yet implementing the original terms of the truce. The deal gave Israel 60 days to pull out of southern Lebanese villages, with Hezbollah required to withdraw north. Argentine President Javier Milei has praised President Trump's promise to return America to a golden age. Speaking to us in Davos, Milei said Trump's use of tariffs was strategic and not protectionist, and he'd consider exiting a South American trade bloc if it means securing a free trade deal with the US. Milei also spoke about building closer ties with China.
We've had some very fruitful meetings with the Chinese embassy and with Xi Jinping, a meeting which we had in Brazil during the G20 summit. And we consider that our economies are complementary and that there's a lot for us to do together as great trade partners.
China has suspended soybean imports from some of the top exporters in Brazil due to what it calls sanitary concerns. Units of Cargill, Olam and Archer Daniels Midland are among those affected. However, traders can still ship to China from other registered entities. The suspension is part of China's efforts to curb food imports and support local farmers. Brazil, meanwhile, is in advanced talks to begin beef shipments to Japan. A major industry group in Brazil says it's optimistic that one of the world's biggest markets will finally open up after 2 decades of discussion. A potential deal could put US beef sales in Japan at risk as ranchers there deal with a cattle shortage. Japan relies heavily on imports for its beef consumption. Shery.
Paul, the Brazilian real, one of the big gainers in the emerging market currency session overnight. We had the Brazilian real topping that 6 level per dollar as we continue to see some uncertainty over tariffs, but also over Brazil's debt trajectory. Overall, though, 7 days of gains for EM currencies and EM stocks, and optimism that we're not seeing immediate tariffs coming from the Trump administration. Do watch out for the ringgit as well here in Asia, given that Malaysia's central bank kept the rate unchanged, and we saw that upside pressure in the previous session. This is Bloomberg. The Nikkei holding on to some gains early in the session as the TOPIX has now reversed course. We are seeing the likes of utilities and materials and energy stocks weighing on the index. The Japanese yen holding steady ahead of the Bank of Japan policy decision. We have the trade balance coming in at a surplus and exports rising more than expected. Recruit Holdings CEO Hisayuki Idekoba now saying that while AI-centric workspaces are on the rise, humans will still play an important part in recruitment for the next 10 years. Idekoba spoke with Bloomberg at the World Economic Forum in Davos.
There are millions of people who are applying more than 20 times, 30 times. And we're definitely trying to have some kind of more like a conversational or like AI agentic experience for job seekers, saying like, hey, I know, you're complaining, nobody is responding. But maybe, you're applying to this job. Maybe, it's a good time to think about, what you need to have or what kind of skill, probably a little bit longer term of planning of getting this job to get this skill. And okay, next, what's next? So I think people probably need more career advisor type of experience instead of, hey, just apply. So with the improvement of AI technology, it's not a hypothetical conversation. It's becoming to be real thing, especially in 2025. It's amazing to see a good new test results every week now.
But how much progress has been made, and how much further are we?
I think it's a typical, typical way to describe the improvement of AI as an experience. It's like, like predictive AI model, and then co-pilot type of model, and AI agent. So what I'm seeing from our tests is like, for example, we have thousands of recruiters. We started with recruiters, human being recruiters, as like a co-pilot type of experience. And of course, it's the best way to try to improve, to keep teaching a new AI technology to be better. And then, what we started to do is like, okay, when we think about each processes, probably we can automate this process. So that is becoming to be more like AI agentic next chapter type of experience, but it's still, it's human in the loop type of process. I think it's very important to have humans still, and maybe, even next 10 years. But, what I'm saying is like, when we think about each, kind of processes, it's going to be more like AI agentic. And so right now, unfortunately, we cannot have a conversational experience for all job seekers, but we will expand it gradually.
We have the CEOs of top companies there. What conversations are you having, and how much traction are you getting?
Yeah, what I'm telling people is actually the trend of the labor market, which is almost all developed countries are having aging workforce. And we have, bigger population which is retiring, and the smaller population which is getting in. And so meaning, when we think about next 5 years, probably it's, of course, it's depending on the economy, but besides that, it's getting to be tighter to get some kind of skilled laborers. Let's say almost all jobs are requiring, 3 to 5 years of experience, plumber or like construction workers. There are many jobs which is requiring skills. But most of the time, the developed countries don't have good pipeline to be nurtured, and meaning like it's going to be tough fight to hire these people.
That's Recruit Holdings CEO Hisayuki Idekoba speaking to our colleague Haslinda Amin at the World Economic Forum in Davos. We have more ahead on the Asia trade. This is Bloomberg.
The Kospi reversing some of those gains that we saw earlier in the week to have the worst day in more than a week already. You're seeing the Kospi lose about 1%, with the Korean won holding steady at that 1436 level. We have heard that Korea wants to issue up to 20 trillion won, as about $14 billion in special bonds starting from today in order to help stabilize the currency. We have seen, of course, economic growth taking a hit, fourth quarter GDP growth missing estimates. SK Hynix, though, coming out with a record quarterly profit, but perhaps a little bit of sell the news. We're seeing some downside pressure after gains of more than 30% this month already. Samsung Electronics also releasing some smartphones with the AI features, Paul.
Well, Hong Kong Stock Exchange chief says about 100 IPOs are in the pipeline for this year after a bumper 2024 saw a 90% jump in money raised from new listings. Speaking to us in Davos, HKX CEO Bonnie Chan says sentiment remains positive, even as President Trump revives his China tariff threats.
And in any event, I think the market it's getting used to sort of having surprises sprang on it. So I don't worry, really. The momentum overall is quite good. And we're at Davos. I've been speaking to a lot of people. Obviously, the topic of U.S.-China relations come up in lots of conversation. I would say that generally there is quite a bit of optimism expressed. So still early days. We're in the third week of the new year. But so far, the Hong Kong market has shown great momentum in terms of volume. Last year, we closed the year with ADT of about 132 billion. Year to date, we are already up at 150. So, yeah.
The optimism is driven by prospects of stimulus from China.
Yes.
But with drip kind of tariffs, some say that, the massive stimulus that we're expecting from China may not happen. I mean, how are you assessing prospects of stimulus and how that might play out into the markets?
Okay, I think the spectacular moment, shall we say, obviously came after the September 24th announcement of the stimulus package. And we saw the market reacting in quite a strong manner. In fact, in Hong Kong, in the course of 2 weeks, we broke our ADT record 3 times. And the current record is 620 billion. And that's about 6 times what we did in the first 6 months of 2024. I remember, when we were seeing that play out, a lot of people were asking, okay, so when is China going to bring out the bazooka? Remember the bazooka? My personal reaction to that is I don't think, the Chinese leaders are going to just sort of, bring out one set of stimulus and say, that's it, we've cured all problems and that's the silver bullet. I do think that they're very thoughtful about the issues that have to be addressed. And as a result, and especially given how dynamic the market conditions and the macroeconomic conditions are, I do think that we should expect to see more thoughtful rolling out of different policies, which will be targeting the questions at hand.
And Bonnie, what's the outlook for the IPO market? Quite a turnaround in 2024. I mean, Hong Kong was top 4 in terms of IPO market.
Yeah, thank you for asking that question. So the IPO market. We saw a very good comeback in 2024. So in terms of number of IPOs, we completed 71, which is by and large, the same level or the same number in 2023. However, the amount of fundraise was 90% more compared to the year before. Also, we are seeing very big deals getting done.
Hong Kong Exchanges and Clearing CEO Bonnie Chan there speaking to Bloomberg's Hasinda Amin in Davos. Now, Chinese officials are set to hold a briefing on capital markets in the next hour. The China Show co-anchor David Inglis joins us now for our preview. And David, a pretty early morning presser for China. Usually they hold these meetings in the afternoon. So how big of an announcement are we expecting?
I mean, you hit the nail on the head, Shery. I think what is different to your point about the one that's coming up, in fact, in a couple of minutes, is the fact that it is taking place before markets get started. And I think I just want to take you back a couple of months back when the last time Chinese officials did hold a briefing was in late September. That's when they rolled out this major policy pivot that was led by the PBOC. The other thing I want to point out, too, is when you look at the lineup of speakers today, And I want to highlight that the CSRC head, Wu Qing, is going to be there alongside PBOC officials and also officials coming out of the Ministry of Finance. Underscores also that almost a who's who that you want to listen to as it pertains to markets will be present and speaking in a couple of minutes. Just not to take away, of course, from the potential potency of double there, of this briefing coming through, we already have a good understanding on broad strokes what they will talk about, improving access for longer-term funds to the equity markets. Patient capital is what we've seen so far in the commentary. Increased allocations, increasing the doors to access to this market. On that very point, I think we just showed you some of the initial reaction so far from analysts where it's broadly more positive, but we need to see details. And also the question marks around the shorter-term impact this could have on markets. I'll end on this. So Morgan Stanley came out with a very specific note on insurers. They do think that insurers will remain prudent in terms of increasing their equity exposure on the back of this. We'll have to wait and see what they say in a couple of minutes' time. Back to you guys.
All right, the China Show anchor, David Inglaise there. And you can also turn to your Bloomberg for more on China's markets briefing. You can go to TLive Go, that's TLIV Go. With there, you can get commentary and analysis from Bloomberg's expert editors. So that briefing taking place before markets open. Let's take a look at how China futures are positioning. A little bit to the upside. That is it from the Asia trade. Markets coverage going to continue as we look ahead to the start of trade in Hong Kong and China. This is Bloomberg.